Hey, what's good, guys? Welcome back to another trading video. Today's video is going to cover a very important topic in the trading industry. Before this video starts, I want to let you guys know that I am partnered with TIO Markets. It's my new broker that I use for live accounts. They have zero spreads, they have an Islamic account, and they also come with no commission. So if you want to have a zero spread broker that doesn't A book or B book you or manipulate your trades, go ahead and check out TIO Markets, link in the description. Click that link. It also supports me as well. So go ahead and do that, and let's get right into the video. All right, so basically I've seen a lot of people trade support and resistance and supply and demand. And here's the misunderstanding. Okay, so a lot of gurus and a lot of fake prop firm traders or just fake traders in general sell you on this course or sell you on this easy get rich quick scheme or easy money method where all you have to do on the charts for day trading is draw out some trends, and if it breaks down the trend, it's gonna go down and blah 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 blah. Okay. The initial thought of support and resistance or supply and demand come from an actual stock or a share. Okay. Now, when you're trading forex, the biggest error in the forex industry, the biggest fail, is a bunch of people who trade supply and demand in forex, in a currency that you cannot own. You can't own a currency, right? So you can't own a share of Euro USD. So why are you trading support and resistance if you can't own a share of Euro USD? Here's the thing: supply and demand is not wrong. You can trade supply and demand or support and resistance on stocks or commodities or crypto. So these three things, anything you can actually own, like an asset, like a share of a stock, crypto, because you're actually owning Bitcoin, you're owning Ethereum, you're owning a coin, okay, a share of it. Stocks, you're owning a percentage of a stock. Did I say that already? Stocks, crypto, and commodities like gold or silver, or oil, you're actually owning the share of that commodity. Okay. What you can't do supply and demand on is Euro USD, JPY, GBP USD, any forex pair you can't, because you cannot actually own the actual forex pair. Hence why we trade smart money concepts. So smart money concepts is a form for retail traders to understand the market better and to trade alongside investors and institutions, so we react based off of them. We don't trade trend lines and Fibonacci and this bounces off this ceiling and that ceiling. Okay, we trade solely based off of logic. So logically speaking, let me go ahead and cover futures and CFDs. So futures, you cannot own futures. You cannot own a CFD. You cannot own a share of a CFD, because CFDs, for example, S&P 500 is 500 top companies in the US. NASDAQ 100 is 100 top companies in the US, and US 30 is Dow Jones. You cannot own that. You cannot own a share of Dow Jones, but you can own a share of whatever stock that's in the NAS 100. For example, let's say Nvidia or Apple is in NAS 100. You can actually own a share of Apple or a share of Nvidia stock. That way you can trade supply and demand, because there is actually supply and there is demand on that stock. But because there's so many companies in one CFD, you can't own anything that has supply and demand, because you don't know what has supply and what has demand. You can't just take the average of every single company in one and make it have supply or demand. So there's no support and resistance. So what do we do for CFDs, futures, forex, anything you can't own? We have to trade smart money concepts. It's called smart money for a reason. So, for example, on NAS 100 US, okay, we trade smart money concepts, meaning we just use logic. We see our liquidity points. This is the high, this is the low. Okay, this is a previous low, price swept underneath it. price retraced up into a fair value gap and continued going downwards because we closed below the liquidity point. Stuff like that is smart money concepts. Now here is the difference between smart money concepts and actual support and resistance. So if I go to Bitcoin USD, right? Is that the one? Bitcoin currently is at $69,000 US. Okay? You can actually trade support and resistance on here. You can trade candlestick patterns, you can trade doji patterns, you can trade whatever you engulfing, bullish engulfing, bearish engulfing patterns. You could trade Fibonacci on here because there's actual real human people, investors investing in it, people like you and I. When you're trading against institutions, that's a different thing. Institutions are not really in Bitcoin. Bitcoin's made up, it's a block, sorry, I voice cracked, blockchain. Bitcoin is a blockchain made up of us, investors investing in it, okay? You can be an investor in Bitcoin, okay? But you can't technically be an investor in a CFD. So let's say price came up here. Let's say price comes up here, okay? In Bitcoin. Where's the arrow path? Let's say price comes up, hits it, and drops down. That's resistance, okay? That's resistance. So price resisted, made a double top. You can actually draw resistance lines. You can draw, support lines. You can draw support lines. Price comes down further. Okay, this is used as support. If it goes up like this, you can then wait for a retracement and buy again before going up. Or if price closes below this line, we're going to wait for a retracement. We can sell Bitcoin, or if you're trading Bitcoin futures, go for a short and short it down below. That's how you trade support and resistance on Bitcoin. You're allowed to. Now, I don't know how to trade support and resistance because I never did. I don't know how to. I did for a while, but I used small key concepts of it, like Fibonacci and some candlestick patterns back in the day. But I don't really use that now. So I don't understand. I'm not keeping up to date with any strategies. So if you guys know how to trade support and resistance, go ahead and trade it, but trade it on something that isn't something that you can own. Okay, so support and resistance is made for asset trading. That's a perfect way to put it. Supply and demand / support and resistance is made for asset trading, asset-based trading. Smart money concepts cannot be traded on Bitcoin. You cannot trade a fair value gap on Bitcoin, or actually you can. You can trade imbalances, right? So this imbalance is still valid, but also support and resistance and supply and demand do have imbalances in the market as well. So technically you can still trade that, but smart money concepts like liquidity sweeps and all that stuff, it's not really as common in Bitcoin. When like the only liquidity is top, the only liquidity is bottom. There's no really like sentiments and stuff. But on an actual CFD, you can trade smart money concepts, but not support and resistance. All right, so I hope that clears everything up for everyone. The big difference between them is that support and resistance traders lose, smart money concept traders win. That's all it is. That's the big difference. Obviously, there's other differences. I'm just teasing you guys. Whoever trades support and resistance, people get mad usually, but genuinely, this is how you trade. Okay. This is like, take me as your older brother. This is how you trade. Okay. Don't be ignorant. All right. I'm not telling you to also be ignorant to the other side and listen to me, but don't be ignorant. Do your research. Okay. Find your own strategy that works for you. But at the end of the day, only one person's right, or one set of group is right. Smart money concepts is the only correct way to trade. CFDs, futures, and anything else that's unobtainable as a share. Okay. That's all for this video. Pretty short video. I just want to make it more informative rather than teaching how to trade, because that's all my channel is about anyways. So anyways, hope you guys learned something. Ciao.